All right, good evening, everyone. How's everyone doing this evening? I hope everyone's doing well. This evening, we'll be doing price action 101. So let's jump straight into this evening's class. Can anyone tell me what is your definition of price action? Just drop it in the chat box. Just let me know what you think price action is. What is your definition of price action? Remember, guys, no answer is the wrong answer. Any answer is acceptable. Okay? It's a learning process. Don't be afraid to submit your answers. So I'm waiting, just giving you guys a chance to submit your answers. If you guys play shy, I'm going to have to tell you. Okay, so in an effort to not take up too much time, okay, Tesha submitted an answer. Tesha says, how price moves. And that's a wonderful answer. So price action is basically the way in which price moves, right? Now, it is good for us to understand price action. I see Sangwoo says current market price or local area price. Okay, that answer makes sense as well. That's a good answer as well, Sangwoo. Thank you very much. Okay, but price action is basically the way in which the price moves. We now need to understand what makes the price move. Okay? So once we understand that price action is the way in which price moves, we need to understand what makes price move, and we need to understand how the price moves. Okay? So price moves in particular patterns. So once we understand these price patterns, we will be able to understand the language of the market makers. Okay? Because the language of the market makers is in price. So let's take it to our chart. So here we have a chart. This is the euro dollar US dollar chart. It's just a random chart that I pulled up. If you guys would like me to move to a different chart, feel free. Just send me your pair that you'd like me to be looking at this moment. I'll give you guys a few seconds to do that if you do have such a desire. If you don't have a desire to look at a different pair, then don't say anything. If you have a desire, then just send your pair in and we'll switch from Euro USD to whatever pair you submit. Okay? I'll give you guys a few seconds. Wow. Tesha says US 30. All right, no problem. So let's go over to the US 30. US 30 it is. All right. So here we are on the US 30. Now, same rules apply. It's a different instrument, it's a different market, but the same rules apply. Okay? So price action is the way in which price moves. And as you can see, the price is moving down, it's moving up, it's moving down, moving up, moving down, up. And so we need to understand what patterns the price is leaving in the way it's moving. Okay? And when we see certain patterns appear, what happens as a result of these patterns appearing on our chart? All right? So who can tell me what, just give me an example of a price pattern. Anyone, just give me any example of any price pattern. I see Tesha says head and shoulders. Okay, so Tesha says head and shoulders pattern. Let's see if we can find one of those here. And I didn't have to go look too far. I'm just gonna try to outline something here so you guys can see. All right, so this is the first thing that jumped out to me. And so I'm showing it to you guys, okay? Head and shoulders. So we have a head and shoulders formation. Let me just try to make sure I draw it in nicely for you. There you go. So everyone can see this. Everyone knows what a head and shoulders pattern is? Did I outline it nicely for you? So what are the rules for the head and shoulders formation? Can someone tell me, how do we trade a head and shoulders formation? Tesha says I have a hard time seeing that. Okay, is it a case, Tesha, where my candles are too small? What's affecting your vision? Oh, no, that's not Tesha. Oh, I think, oh, okay. So Tesha says he or she's having a hard time seeing it on the chart. Okay, let me see. Annotate. Wonderful. I'm happy that it's now available. Okay, so there you go. Shoulder, head, shoulder. Is it clearer now? I see Noble says reversed HNS. That's correct. Who else said something? Grace says inverted. That's also correct. So Tesha, can you see the head and shoulders now? Just trying to find out if Tesha can now see the head and shoulders clearly. Okay, Tesha says I can see it. I mean, I have a hard time identifying in the chart. Okay, so Tesha, you can see it now, but you're having a hard time being able to identify a head and shoulders formation on your chart. Well, this comes with practice. So once you know what a head and shoulders pattern is, your eyes will pick it up the more familiar you become with it. Okay, so a head and shoulders formation is basically where you find yourself finding, let's say the price is moving, down, right? So it moves down, it makes a swing low. So with it making a swing low, it pulls up, it makes a lower high, right? A swing that is lower than the previous swing. So a swing high that is lower than the previous swing high. Okay, so here you have a swing high that is lower than the previous swing high. Okay, so once it does that, you have your swing high, you have your swing low, you have your lower swing high, and then it makes a lower swing low, pushes up, makes another swing high, could be a lower swing high or a higher swing high than the previous one, and then it pushes down again, creating a higher swing low. Okay, so now we have a higher low. And what we're going to do in a case like that is we're going to draw a neckline. Okay, so the neckline is basically like this. And what happens is once price closes or crosses this neckline, if it closes above or crosses above the neckline, we're looking to go long. And generally our aim will be, let me just take off the annotate 1 second. Generally, our aim will be the length of the head to the neckline, like this. And you take this from here and you put this over here like that. Right? So you have, some of us do it like this, and some of us do it like this. Okay. Let me just erase this. All right, so this neckline, good. So some of us do it like this, where we do our projection from the head to the neckline, and we put this basically on top of the headline, the neckline in that same situation. Let's take off this tool. Let me draw the neckline from the chart. Second. Okay, 1 second, guys. Looks like my 24 is glitching for some reason. Okay. Good, so here you have the neckline, okay? And this would be from the bottom of the head or the top of the head to the neckline, and then you would take this measurement and project it directly above, right? Touching the neckline, and this would be your projection, okay? Some other traders trade it like this, like that. From the swing low or swing high of the right shoulder is where the projection will be placed, and the profit target will be the length of that projection. So once the price breaks out, it makes that distance, you're done. You exit your trade, move on to the next setup. Okay? So that's the two ways in which you can project your profit targets using the head and shoulders formation. Okay? Now, all of this makes up price action. Now, inside of this head and shoulders formation, there are other price patterns that you can also pay attention to. For example, one of those would be, let's remove that. Let's try to remove, okay, I'm clearing the annotations. All right, so one of these other formations would be a zigzag or WXY. We have quite a lot of other formations that we can look at, and let's use this one here as an example. So this is a measured move, and I'm going to take this measured move and I'm going to project it over here. And as you can see, I made that measured move a little bit more, but this would be what we want to call a zigzag formation. Okay, so this could be a zigzag. We can look at it as a WXY. Basically, it's a three-wave pattern. Okay, it's a situation where wave 1 is equivalent to the length of wave 3. Okay, or AB is equal to CD. Okay, and this would be A, B, and this is C, D. Okay. So this is A, B, C, D. So this is AB equal to CD. All right. And this, as you know, generally we call this a zigzag formation. So price action is made up of different price patterns. Okay. And the price patterns are what we use to identify the language of the market. Now, generally, when we get a three-wave formation, that is referred to as a corrective move. And if the price comes back and crosses into the price area of wave 1, then we would assume that it is a complete correction and the price could be coming back to the downside, breaking the low of this three-wave move to the upside. Okay, and as you can see, the price came back, it did break the low. Okay, they actually went a little bit further than breaking the low as well. So as you can see, This was an ideal setup, an ideal situation to get involved. Okay, let's try to clear some of this off. So we found ourselves a head and shoulders formation. We found ourselves a zigzag, which is where AB is equal to CD. It's a measured move. And after that measured move, what else are we going to be looking out for? After the measured move, we're going to look for another impulse wave. Okay, because the price moves according to the Elliott wave theory. The price moves impulse, correction, impulse, correction, impulse, correction. So that's how the price moves, making an impulse move, then making a corrective move. Corrective moves can become drawn out corrective cycles. It could go on even forever, right? But we need to understand that it's an impulse wave followed by a corrective wave. Okay? Any questions so far? I see, let me see here. Grace says engulfing candle. Okay, Grace, you said engulfing candlestick. Is it that you see one on your chart, or is it that you'd like me to locate one? Just giving Grace a few seconds. Is it that you see a engulfing candle, or would you like me to identify an engulfing candle? Grace says it was an example of price action. Okay, so Grace was basically saying that an example of price action is an engulfing price setup. Okay, engulfing candlesticks. So for those of you who do not know, what is an engulfing candlestick formation? Let me see if I can annotate and show you guys. An engulfing candlestick formation. Right here. Can you guys see it? That is an engulfing candlestick formation. We have a green bar followed by a red bar that completely engulfs the green bar. So this would be an engulfing candlestick formation. And generally, when we see an engulfing candlestick formation, it's telling us that the price is going to be going in the direction of the candle that engulfed the other. So if it's an engulfing candle to the downside, it means that you're going to see price moving to the downside. Okay. If it's an engulfing candle to the upside, then you're going to see price continue moving to the upside. Okay. Now, in this case, we have an engulfing candle to the downside, and you can see that price continued moving down, made a correction, moved down some more. All right, that three-wave move is over. And as you can see here, you have 1, 2, 3, down. Here, you have 1, 2, 3, up. Same price pattern. See this? 1, 2, 3, down. 1, 2, 3, up. See that? Same price pattern formation. Okay, let me see here. Any questions? I'm giving you guys a chance to submit any questions if you have any. Bring your questions, guys. I'm more than happy to receive them. Bring on the questions. Okay, I'll come back to the chat box. All right, so we have identified a three-wave price pattern formation. We have identified a head and shoulders formation. Let us move forward. Let's see what else we got. All right, so here we have another situation. This is one of those situations where some traders would say that this is a down channel, whilst others may say that this is a flag formation. Others would say that this is an expanded formation, expanded pattern, and it would be 1, 2, 3, 4, 5, up. All right, so this would be an expanded pattern formation for a lot of youth in the market. You would look at this and say that this is an expanded formation. Now, with us finding an expanded formation, that is another way of us identifying what the market can potentially do. Okay, now in a situation like this, we have an impulse up. We have this expanded type formation coming to the downside. Some traders may want to call this a flag as well. Okay, and what you want to be doing is waiting for this to break out to the upside. If it breaks out to the upside, closing above or heading above, then you'd want to jump in and go long. Okay, so in a case like this, you'd want to jump and go long. You have two possibilities depending on what the first impulse wave was. In this case, the first impulse wave made 1, 2, 3, 4, 5. So this looks like a 5-wave move, right? And if it makes a 5-wave move, then it is likely, potentially possible that we can get an impulse, which the impulse is generally longer than the first wave, right? So this first wave here, the next wave after the correction is going to be longer than that one. Why? Because that could be our wave 3 in a 5-wave impulse. And if that's our wave 3 in a 5-wave impulse, this measurement will not hold price. Okay, so price came to the tip of the measurement and pulled back a little bit, but did not continue going and exploded to the upside. Okay, with price exploding to the upside, it's basically building a wave 3. All right, now with price building a wave 3, this would be wave 1, this is 2, and this is 1, 2, 3, right? So now we're going to be looking at creating another corrective cycle, because we got this one looks like 1, 2, 3, 4, 5. This is an impulse to the upside, a 5-wave impulse. And so we're looking for a 3-wave correction. Okay. So if this is going to be our 3-wave correction, let me see. We got 1, 2, 3, 1, 2, 3. All right. So this is going to be a big one. So this one came down as, let's see here, 1, 2, 3. So that's W, X, and this is Y. Okay, so this made W, X, and Y. So this is coming down 1, 2, and this is 3. Okay, so this made a 3-wave move to the downside. It is a big, quite a big corrective type cycle, but we were able to catch that move down. Let me try to put in a line just to mark. Right. So as you can see, we were able to make that move down, and we went for the next wave after making that wave to the downside. Okay, so we were able to make this wave down, making this 1, 2, 3 wave down, and then the next impulse came yet again. Okay, that next impulse would be expected to be this length. If we're using market geometry. All right, so it's a little bit shorter right now, still has the potential to continue moving up. Okay, so that would be our projection for this type of price action. Okay. Anyone else knows any other patterns? Do you guys know of any other patterns that you'd like us to take a look at? For me as a trader these days, all I'm looking for is expanded patterns and contracting patterns. Expanded patterns, I don't necessarily like trading them because they do extend a lot. So I don't really like getting involved with them. So I try to stick with the contracting formations, especially because I am more of a day trader, right? Now with contracting formations, we can find that the market can give us a nice burst of volatility when the market opens. Okay, so I prefer to stick with um, contracting formations in opposed to expanding formations. Though expanding formations are indeed very common, I prefer the contracting ones because of the punch that they pack. Okay, let us see. In the meantime, let me know if you guys have any other patterns that you'd like us to take a look at. All right, let's see here. Let's see here. What other patterns can I find? Let me see here. This one looks like all right, so this one looks like a typical flag formation, right? But if we look at this properly, if we look at this flag formation properly, we can see that there are waves inside here. And this wave is an up one, this is a down wave, right? So this is a down wave, this is one, this could be, let's see here, 1, 2, 3. Let's see, 1, 2, 3. Right, so this could be our 1, 1. So this could be 1, 2, 3. Let's see here, we go. And we got this one repeating itself, pulling back. This one pushing up, pulling back, pushing up. So this is a situation where one of these waves became expanded. Okay, because if we look at this, we got one wave up, one wave down, right? So if we got one down, we got 1, 2, 3. So this is a complete wave cycle. 1, 2, 3. This one comes back over here. Then this one goes back over here. Then we still get an extra push down because this is where this price action is supposed to continue to the downside, but it did not happen. We have this scenario happening over here. Okay. With us getting that type of scenario, this would only lead me to believe that this is an expanded formation. Okay. And with this becoming an expanded formation, it becomes a little bit more on the complex side. So you need to be aware of what an expanded formation looks like, what a contracting formation looks like. You need to know what an extending formation looks like, because if the price did not break down after 3 waves, whether or not it's a complex pattern formation or a simple pattern formation, we need to be able to be ready and anticipate what is going to be coming next. Okay, and in order for us to be able to be ready and anticipate what is to be coming next, we need to understand the price patterns. The price patterns will give us a very strong idea as to what can potentially happen in the market. Okay, any questions, guys? In the meantime, I'll give you guys one more example. Look at this. We would consider this to be impulse, right? And then we will take that impulse and expect after this correction, we get another impulse. And look at the distance of this. It is very close to the distance of this first impulse down. Okay, so these would make very good targets that we can use to find our potential profit targets. Okay, so we need to understand price action. And if we understand price action, then we can use it to make predictions. Okay, Any questions? I see Bella says, thanks. You're welcome, Bella. Welcome, welcome. All right. So let's see here. Can someone else give me another pattern? Just give me a random pattern, anyone. I'll give you guys a few seconds. Just give me a pattern off the top of your head. Okay, it appears you guys are at a loss for words. That's okay, no problem. All right, so let's see here. We have covered this channel looking pattern, right? This is considered to be a flag pattern in some cases. So we've covered this, and as you can see, we get a nice explosive move from it. What else we got? Let's see. With the US 30, something I should make sure that I touch on. We need to understand timing, especially with the US 30. This is an instrument that generally makes its moves around 8 o'clock. And that is like, I would say 80% of the times, it's making its move at 9 o'clock or around 9 o'clock. Okay, so here you can see that it's it's 8 o'clock in this case. So it's making its move around 8 o'clock, between 8 and 9 o'clock, right? So here you can see that it's making its move here at 8 o'clock on the spot. Okay, this is the 9 o'clock candle that opened here, and you can see that it exploded to the downside. So we can start looking for entries around 8 o'clock. So here you can see it's 8 o'clock and the price pushes down. Here you can see this one is 2 a.m. This is the open of the European market. You can see the price pushed down. This is 5 a.m. This is the break time of the European market. You can see the price pushed up. Okay, here you can see it kind of pushed down a little bit around this time, but it actually made its move a little bit later. Okay, so we need to understand that timing is also important. And if you guys were present for the sniper entry class, you would be able to understand what I mean by timing. And when I say 2 o'clock, 5 o'clock, 8 o'clock, these, even 12 o'clock, these are very good times to be getting involved in the market. However, in most situations, by 12 p.m. Eastern Standard, the market has slowed down substantially, and it really doesn't make much sense for you to be available in the market. It's best that you pack up and leave, come back another day. Okay. I see Tesha says double top, double bottom. Let's see if we can find a double top, double bottom. Okay, look at this one. This is a case where we can say that this is a double bottom, right? In real time, it would be looking like this. And this would definitely be a double bottom. Okay, we have price making a low, making a high, making another low. So this is considered a double bottom. And normally, whenever you get a double bottom, you can look at that and say that you're possibly going to get a three-wave move. So you're going to expect that the price would do something like this. Let me annotate this one for you. You can expect that the price would do coming down, bounces, 1, 2, 3, and continue moving down, right? That's what we would expect. However, that is not always the case. We do have some scenarios where we can see the price coming down. It bounces, makes its three-wave move, and then it takes off back to the upside. In cases like this, we would call this a flag formation. Okay, so this would not be considered to be a flag formation. This would be considered to be a flat formation. Okay, so with this being a flat formation, we're going to expect that the third wave could become an extended wave. Okay, so the reason why the third wave can become an extended wave is because the flat formation wave count is 3, 3, 5, right? So this third wave could end up becoming a 5-wave impulse instead of just a small 3-wave move for us to continue to the downside. It could become a 5-wave impulse. It could become a very big 5-wave impulse, or it could also become a very small 5-wave impulse. Okay, so let us see what's happening over here. Let me just take off this annotate. So double bottom, and we have price pushing to the upside. Okay, and let me see, is it moving in a 5-wave impulse? We have 1, 2, 3, 4, 5. So this did make a 5-wave move to the upside before looking to come back to the downside. Okay, so how do you trade a double bottom setup? So this is how you trade it. We put in a horizontal line. And you project it up to the neckline. And you project that up like that. And as you can see, once we made the measurement, down came the price. All right. So the price went down, but did not continue moving down. So with the price not continuing to move to the downside, what we're going to do is we're going to look for a reason to continue going long or a reason to go short. Since the price bounced back so aggressively, we're going to look for a reason. 1 second. Let's bring on the annotate. We're going to look for a reason to go short. And if we're going to be going short, we need to see price action that looks like this, right? Up, down, up, down, up, down, up. So once we get price action that looks like this, we can expect that we're going to get a nice move to the downside. Okay, now we didn't get price action like that. We got price action moving impulsively to the upside. And with price moving impulsively to the upside, that gives us a different story, right? So basically what it tells us with the price moving back against my impulse so aggressively, it is basically saying that I am not ready to go to the downside. I am still in an uptrend, okay? And as you can see here, the price continued moving up. We got a correction. And here you can see we have an explosion of price to the upside. Then we have another explosion of price back to the downside. Okay. Any questions, guys? All right. So I will let this bring us to the end of today's class. If you guys have any questions, please submit your questions. Drop them in the chat box. I'm more than happy to take your questions. Let me know if there's anything about price action that has you confused, uncertain. Just let me know. Give you guys a few seconds. All right, I'm not seeing any answers coming through. No problem. Okay, guys, I will see you on our next class. Thank you so much for coming. Have yourselves a wonderful evening. Bye-bye for now. Till next time. Bye.